So glad you could join us today. I'm Marlon Bowling, your tour guide to the Ag Commodities. Happy Monday to you. Well, we're getting things off to a roaring start, as Janet alluded to earlier in the broadcast. If you were tuned in then, you heard that the overnight trade opened up, limit up, basically, in the wheat market with the news that India wants to shut down their exports. Now, they will allow a little loophole in there, apparently, for some countries that are regular buyers and need that for what they call food security for certain nations, but they won't allow any new sales. So that really propped up the wheat market, and it went rocketing higher right at the open on the Globex last night, and then it kind of eased back. Now, I want to take a look at where we are right now and then invite in some extra expert help, too. So when the dust all settled here on the Globex market here a little bit ago, we had that July corn contract at $797.5, and that was up 16.25 cents. Got as high as 803 3/4 before backing off. We had December new crop corn 12 higher at 760 3/4. Well, let's look at the soybean trade overnight. Our quotes provided by bar chart show July 14 3/4 higher at 1661 1/4. And you have November 13.5 higher at 1511 3/4. Now, drum roll, please. Let's look at the wheat market here. After being up about 70 cents in the early going, we had Chicago July 57 3/4 higher at 1235 1/4 as we came across the finish line on the Globex trade. On the Kansas City market, you had July 60 cents higher at 1342. You can tell that it was as high as 1352. That would have been 70 cents higher at one point. And on spring wheat last night, you had July 46 higher at 1371 per bushel. Let's bring in Brian Hoops of Midwest Market Solutions. He's in Springfield, Missouri. All kinds of things that are going to be affecting the market this week. So the news out of India, Brian, everybody thought that would probably lead to an explosive open last night, and it did. Didn't disappoint there. But we also have the wheat tour that kicks off this week in Kansas, and that should be a big deal too.
Yeah, absolutely, Marlon. You know, we're in the stages of a supply-led type rally, and the tour will confirm that. You know, we've had not only government reports from the USDA, but also some private state reports that have indicated Oklahoma and Kansas crops to be far below last year. Texas is going to be included in that, far below last year. And this tour will also talk about that. And then you have the spring wheat crop, which is really struggling to be seeded. You know, last week we were about 27% seeded. The normal for this week should be 67%. So, you know, the trade or producers have made some strides over the last week in seeding the spring wheat crop, but it's been very slow going. Our office in Thief River Falls, Minnesota, has talked about producers in that area not even turning a wheel until maybe this week, but there's more rain in the forecast. So it's a real struggle. Wheat producers, and that struggle, that supply struggle to get the crop in the ground is what's really fueling this market. Now, I don't expect that we're going to step in and really be a world exporter of wheat. And so this demand phase that we've talked about with India backing out of the export market may not really help our U.S. exports out that much, but we are going to put in some premium as a result. India is the world's 8th largest exporter of wheat. It does sound like they're going to back out for most of their wheat exports, except on some select countries, as you alluded to.
Okay, we'll talk about the livestock trade as well. We're going to be talking with Brian Hoops about the cattle and hog markets after this. All right, let's talk with Brian Hoops of Midwest Market Solutions and talk about the setup now for the livestock trade. When you have all the grain markets in unison going higher like they did overnight, Brian, what's your thought on what that may do to the livestock trade here today?
Well, you know, over the last couple of weeks, I've probably given 8 fundamental reasons why the live cattle market should go higher, and it's really failed to respond to any of those fundamentals. It's more about money flow at this point, and I think we're going to see probably more of that on the opening this morning. That means some weakness in the feeder cattle market, dragging live cattle lower with it, despite the positive fundamentals that the cattle market enjoys. So it's it's one that the funds have been selling, been liquidating as the trend has gone sideways to lower. And until there's a reason for them to cover shorts, it's likely to see more weakness in that market. Now, the hog market did get a little reprieve on Friday as we held the previous day's lows and some short covering developed. So that market is one that's going to follow the technicals. It's going to certainly be extremely oversold, but it's down near weekly support. And if it's an area that finally can hold this support area, there's a short covering rally to develop in that hog market as well.
Well, let's walk through these prices as we wrapped up last week here. Let's start with live cattle, and let's take a look at where we headed into the weekend. On the June live cattle, it was interesting how all by itself it was higher. It was up 42 cents. And you had the August contract going down 42 cents at the same time. So quite a bit of divergence there. By and large, all contracts beyond June were down anywhere from 30 to 70 cents on Friday. And if you look at the feeder cattle market, well, we finished up with the August contract $1.50 higher at 168.02. That may be a different story today, don't you think, if you have the big move here in the corn?
Yeah, absolutely. Unless the corn market really backs off, it's going to be hard for feeder cattle to sustain any type of rallies. And I do think if you get weakness in the corn market with the late plantings that we have and the forecast for additional rains in some of those wet areas, it's going to be a short-lived dip in the corn. So feeder cattle going to remain on the defensive. It's going to keep a drag on the live cattle. And there is a cattle on feed report coming out Friday. And cash calls right now are steady, maybe even a little bit higher in the country. But we've been trading that 140 area in the cash markets for at least 5 weeks now. And this week looks like it could be number 6.
Well, let's check out our lean hog trade then. And we wrapped up last week with June up 327 and July 335 higher as we headed into the weekend there on the lean hogs. As you mentioned, that was a strong performance to wrap up the week. But they have fallen so far, one has to wonder if that's just a one-day bounce or a 2-day bounce, or if there's more to it.
Yeah, there's not much fundamentals to it, so it's going to have to rely on the technicals. There is good commercial buying near this weekly chart support, so that's a positive. And the key is going to be if we can hold that support, then the funds will have a reason to cover their short positions and give us a rally. Otherwise, it's going to be more technical chart-based type selling.
And on the outside markets this morning, a little bit of weakness in the Dow, but not much going on. So we'll see how things start out trading during the daytime session. Thanks, Brian, for the help today. Brian Hoops of Midwest Market Solutions here on a Monday morning. Janet, we're about ready to kick things off.